We're discussing strategies to navigate the uncertain economic landscape as we enter this new year. In this segment, where are equities heading? And is cryptocurrency a good to have or a must have? Joining me in this segment are Philip Wee, Senior Currency Economist at DBS, and Ben Powell, Chief Investment Strategist at BlackRock Investment Institute. Gentlemen, welcome. It's going to be a year of transition for 2022, but investors are still going to be looking for yield. Where are they going to find it with high growth and high prices?
Firstly, it's still going to be equities. So having at least a portion of the portfolio in good companies, which generate sustainable cash flow, which can then pay you a dividend income, we continue to think that is a critical part of portfolios moving forward. Secondly, we probably need to be a little bit more creative in terms of where we go in terms of geography. So I think many global investors continue to be structurally very underweight this part of the world, Asia, China specifically, I guess. But I think geographically, we're going to have to be a little bit more creative in literally looking further afield for where we might find income. And lastly, again, I think, I guess in the creative kind of direction, we're going to have to maybe be more constructive around illiquid private assets, including real estate, which obviously a big part of many people's portfolio, but we think that is going to continue to be important given how hard yield is to find in traditional fixed income.
Philip, where do you see the US dollar heading for 2022? And what will the impact be on other currencies, particularly those in emerging markets?
We see the greenback still extending its appreciation. We have penciled in 2 Fed hikes in the fourth quarter. However, we do think the appreciation is going to be bumpier because inflation has also risen sharply and are above trend in many countries. We do expect more rotation plays as the Fed and central banks take turns in normalizing monetary policy. So unless Omicron proves to be too deadly for existing vaccines, I think most policymakers assume that Omicron will not derail the recovery. I think the bigger concern, especially for emerging markets, is whether it ends up lifting US inflation, US interest rates, and the US dollar more than expected. So in this regard, we are paying very close attention to two of the most stable currencies in the region, the Indonesian rupiah and Indian rupee. So we will be concerned if they start to weaken, let's say rupiah above 15,000 and the rupee above 77 per dollar. And dollar thing, I think we are quite happy to return to its pre-COVID 134, 139 range in line with expectations. We do expect MAS to join in the normalization and to tighten the Sing dollar policy.
Ben, let's talk about what we're seeing with China because regulatory risks there are rising. We could see more of that for 2022 as well. China stocks, even some of them, face delisting even in the United States. Should investors be hedging their China stock plays for 2022? Should they be staying cautious here?
When we look at current valuation in the China equities market, it's already discounting, it seems to us, quite a lot of bad news. And actually, when we look back to last year, 2021, for us, the last couple of months of that year, 2021, was really critical in that China authorities started to move in a more pro-growth direction. So for us, we've seen the turning point in policy, and that's kind of a huge deal and is obviously quite constructive. And given the context, which is a general kind of caution, understandable, but nonetheless a general caution, which we think markets already reflect, for us, we would be cautiously optimistic China, and that's why we're overweight Chinese equities through 2022 on a tactical, let's say, 6 to 12 month horizon.
And Philip, the market thinks that the viability and the value of cryptos, digital currencies as well, that's going to increase for 2022. Do you think that cryptocurrency allocation in portfolios is going to grow for 2022 for investors? And how big of a role should it play? Is it a nice to have or is it going to become a must have eventually?
People like crypto because they are free of central bank control. At the same time, ironically, it's the same reason why central banks are critical of cryptos. So players who participate in cryptos also need to be wary of large fluctuations. I think this is a very important point. See, after the COVID outbreak in March 2020, Bitcoin, for example, has risen 800%. But bear in mind that the Fed and all the central banks were cutting rates to near 0% and delivering QE. However, the Fed has turned hawkish. It has started tapering asset purchases. So we've seen Bitcoin struggle to achieve and sustain new highs. And so it's actually quite volatile, rising and falling more than 100% several times. So now the big question comes in. The Fed and other central banks are going to be pressured to tighten to address above trend. So you do expect crypto to be more volatile. And I think each individual needs to ask themselves how much risk they're prepared to take.
Ben, the search for alternative sources of return, we saw a lot of that in 2021. We were expecting to see it again for 2022 and beyond. Which novel asset classes do you think are going to offer some good opportunities for investors, and what risks should they be taking into account for 2022?
I think as investors continue to familiarize themselves with the three letters of E, S, and G, those are three risks which I think are moving from being a little bit unorthodox just to a kind of normal way that we assess equity market risk. So that's risk around climate change, the environment, of course, social risk, and governance, maybe the least controversial. Investing in companies which are better run and less likely to let you down as an investor seems to be something like obvious these days. So I think that kind of mainstreaming of the, let's call it the G risk, the governance risk, we think is going to continue into S, the social aspect of companies' purpose, and E, the environment, of course, the climate change.